Hi, it's Rob Brown here, host of the Accounting Influencers podcast. And in a series of video interviews we're doing with Shorts and the clients that they serve, we're looking at what it takes to put together a great deal, how we look after clients, and how clients that are progressive and growing bring in the expertise they need to make great things happen. So I'm thrilled to have with me today Andrew Mills, and Andrew's from T Allen Engineering. Andrew, how long's that been going?
We've been trading since 1994.
Okay, and you're the boss of that one. This is your baby?
Yeah, absolutely. From day one, from the 13th of June, 1994, and still here today.
You remember it well, obviously.
I do, very well.
We've got David Robinson in. David, you're the tax director at Shorts. How long have you been there?
I've been at Shorts for 6 or 7 years now.
Okay. What's it like working there?
Yeah, it's great. So, I do a lot of work with Andy and the corporate finance team, work on all kind of deals, EOTs, management buyouts, trade sales, you name it, really get involved. And I think we've got a really good working relationship with the corporate finance team, something that we work hard on.
Yeah, and we've had videos before and talked about that. Andy, you're in the corporate finance team. You're the partner there. This is a regular kind of deal for you, or is what we're going to talk about a little bit special?
It's a deal that we're doing increasingly often. I think if you went back sort of 2 or 3 years ago, then we didn't tend to see lots of these. It was more trade sales or management buyouts. And, we're looking at succession planning, which is what I spend a lot of my days helping people with. But EOTs, we're doing lots of them now. So it's becoming more day to day for us. We've always got some on at the moment, but it is a relatively new concept.
Yeah. So in the first of 3 videos, we're going to look at pre-deal, if you like, pre the transaction, and get a feel for how this all came about. So Andrew, let's start with you. You were looking at doing what in your business that brought this about?
Basically, there was always a question mark for myself about what was the end game, if you like, the exit plan. I was the sole director of the business. My wife started to ask me what was the plan, and I didn't really have an answer. So basically, we looked at things. Shorts then actually got involved with the business in 2018 that possibly could have resulted in a trade sale for the business that got quite advanced, but unfortunately that didn't quite get over the line. What we decided to do then with Shorts is go down the trade sale route. And personally speaking, for me, it wasn't exactly what I was looking for. I wanted to make sure that T Allen, the emotional attachment I've got to it, that it was left in good hands. There was a legacy for myself, and the staff were looked after. It was very, very important to me, that. So looking at certain companies with trade sales, some were doing things in a way that I thought was right, and some unfortunately not. So basically, we decided that really it was going to be a problem. A trade sale, management buyouts were discussed, but the employee ownership trust then become an option, and everything that you could, and once I researched that and everything that you could actually do with it, it felt very right. And it's gone really well.
And Andy, there's so many ways to do an exit, isn't there? So many ways to put a deal together. As the conversations with Andrew developed, was it obvious that an employee ownership trust option was the best way to go?
Yeah, I mean, I think eventually, as Andrew sort of described, I think we started off with quite a clear picture. It's probably going to be a trade sale, but then as that discussion went on, as we do with most clients, really, we started going through the various options as Andrew's describing. So trade sale, these are the pros and cons. This is what it means for you personally. Same with management buyouts, same with an EOT. And as we sat there, I remember sitting there in the boardroom with Andrew and his wife, and we went through and said, well, actually listening to you, we really think this is going to fit with it. And Andrew had sort of half got there himself already, I think. And that sort of helped. Then we just went through this discussion, went through all his personal objectives and for the business. And then it became quite clear once we'd gone through that process that EOT was going to be the right answer for Andrew.
And David, with employee ownership trust, they're a recent phenomenon, really. What are the benefits of an approach like this?
Yeah, I mean, it is something that's kind of gathered momentum, I guess, in the last two to 3 years, but they have been around since 2014. And I think the reason that the government's trying to push these is because they want businesses to be employee owned. It's good for the economy, it's good for the country. And why and how the government trying to kind of encourage that is by giving some tax breaks, tax benefits. So one of the key things that business owners are very interested in on an exit to an EOT, is that the capital gains tax rate is effectively 0%. So rather than selling shares to a trade buyer or a management team and paying capital gains tax at 10 or more likely majority 20%, actually getting a zero tax sale. That's really obviously a really beneficial tax rate. But we're very keen to explain and explore with our clients that actually it needs to be right for the business, and it needs to be right for the business owner that's kind of exited. And with Andrew, he mentioned already, on the call that legacy was really important, had to be the right fit. So yes, the tax breaks were really good for the seller, but actually it was really important that we get this, make the right decision for the business as well. So it ticks a lot of boxes, I think, is what we would say.
Andrew, were you working with Shorts before this? Were they your accounting advisors, so it was obvious to go to them, or did you pick them out because of their expertise with things like this?
No, I wasn't. I was not working with Shorts at all. And yeah, it's. I will be honest with you. It's obviously a real big decision for myself to make sure that we engage with the right advisor. And I did go to more the incumbent that we were using for our account, our sort of statutory account submissions, general finance, chartered accountants will look after us. But yeah, I went to a Shorts seminar where they sort of discussed business sales, etc., and I got a really good feel there. I did, and we obviously then had some meetings before I actually engaged with Shorts, and it had to be right where I felt comfortable working with the right people, where the process was going to work really well. Obviously, I spoke initially to Andy, but then Adam Ames and Dave were very, very prominent in the day-to-day parts of it, and it went ever so well. It did. It was the right decision, and it got it over the line for us, which was and now we've actually moved to Shorts for all our company accounts as well. So that's a nice little reference there as well for you.
It's often the way it goes, though, isn't it? If something like this happens and it goes well, and I'm just thinking it's not just you and your wife you were considering here, Andrew. Your employees, were they involved in this decision?
Quite honestly, no at the start, but what it allowed me to do was that we have certain employees, and there are obviously long-standing employees at T. Allen that have played. It's not all about myself. Yes, I have been there from day one, and I've led the business, and I was the 100% shareholder. But absolutely categorically, there are some key people at T. Allen that have played a huge part in getting the success that the business has had today. So what that allowed me to do was obviously engage with the managers, explain what we're doing. There was also options in there to put something called an EMI scheme in there, which worked really well. When you make an announcement like this that you're actually going to be disposing of the business, if you want to put it in real black and white terms, it's a huge, it matters to people, and I then basically told them what we were looking at doing. People, I won't say they're skeptical, but it's changed, it's different, but now it's absolutely it's accepted, and it's gone really, really well. But yeah, it also gave me an opportunity to actually recognize the impacts that certain people had at the business, and eventually when that happens with the MI scheme, that's going to be a huge benefit to them as well, which is brilliant and thoroughly deserved.
And then, Andy, when we talk about deals like this and the way you structure this, there's a lot of people involved, a lot of stakeholders, a lot of people to keep happy, isn't there? A lot to consider. And obviously the employer ownership trust was the standout option.
Yeah, absolutely. And I think, you come up with that as an option, and you see that meets the owner's objectives, and collectively make that decision. And then I think inevitably what then moves on to is, in order to make that final decision, it's relatively new to most people. So then there's lots of practical questions that follow up, which you need somebody who's experienced to be able to tick those off for you in terms of practical things. So then there have to be questions like, okay, well, what is it? What does a sale to an ownership trust look like? What does that mean? Because it's a new concept to people. So actually, it's going to be trust that's going to be owned by all the employees. You're not actually selling shares to the individual employees. That, that's quite something people need to understand.
Yeah.
And then most end managers say things like, well, how does a business practically run then? Because the employees all own it. So are they going to have a say in all day-to-day decisions then? How's that going to work practically? And of course, that's not how it works, because that wouldn't work, on a day-to-day basis. What actually happens is the directors carry on running the trading business, but actually there's a lot more involvement from the employees in terms of having an employee representative sit on the trust, and they're involved in the actual ownership, and also those employees tend to, when then they step up into sort of directors' roles and get involved that way. But it's not everybody on the shop floor or whatever who's actually making the day-to-day decisions. So those sort of practical questions then come next to really make that decision.
Yeah, like how is the deferred structured, and is everyone involved in the decision, and how is an EOT sold? There's lots of things. Now, I may come back to you if you've got anything to add finally, but David, just talk us through a little bit about the FAQs that come up. People watching this, thinking about exit for their business. You've talked a little bit about the tax efficiencies versus a trade sale, but talk to us about, say, dividends and retaining the shares. How does that all work from a tax perspective?
Yeah, so it's a good question. So, some owners aren't necessarily ready to, dispose of all their shares in the business. So, we've tended to see deals like Andrew's where all the shares go into an EOT, but there are options to retain some shares as a seller. So as long as you're selling, say, 51% plus, then you're okay. You're into these EOT rules. Dividends wise, yeah, if you're retaining shares as a seller, then you're just a shareholder as normal. You can take some dividends out if you want to, subject to the board of directors approving it, etc. The actual EOT, the trust itself, we tend to set those up, and how that works is that the trust wouldn't take a dividend, because that's not tax efficient for the trust or for the employees really. Instead, what would happen is the company would contribute up to the EOT, and then that EOT would then make payments out to the seller on the deferred consideration in the first instance. And then coming back to the employees, FAQs for employees as well, because they want to know what's going on. So one of the key benefits from a tax perspective for the employees, other than having a share in how the business is doing and hopefully benefiting from that down the line, the employees can actually participate in tax-free bonuses. So you can have a tax-free bonus for an employee up to £3,600 per year, and that's across the board. So from someone who's just started, right up to someone who's been there for 30 years, they can have a tax-free bonus, and that shouldn't be underestimated, I don't think, because what the government are trying to achieve with these things is to have a business that is employee owned, where all the employees are coming in really incentivized to drive that business forward, because ultimately they're going to benefit from that. And if they get some tax-free bonuses, money talks, doesn't it? So the idea is that it really helps to drive that business forward, and we've seen that in a number of jobs that we've been involved in.
Well, in the second video, we're going to look at how the deal panned out and what happened as we pushed it through. But anything, Andy, that you'd like to add here, just in terms of how you set this up and some of the decision making, or have we covered everything from your perspective?
Well, I think we covered most of the things. I mean, I think the one thing Dave sort of touched on there was probably deferred, and that's probably another one of the FAQs. I think because how these deals tend to work is there's some cash on day one, the rest of the valuation will then come over a period of time in terms of the cash. So if you're an owner like Andrew that can sell, that's one of the questions. Well, okay, how's that going to work? How's it going to be structured? When are we going to get paid? So that's something that just needs to be talked through with an owner manager in terms of how that's going to be structured. Can I have security on it? What's the timing of that going to be paid? What happens if the business overperforms or underperforms in terms of cash? Can I get that, accelerate that deferred, or can I delay that deferred? Those are sort of practical questions that we can help answer, so they can get comfort on the valuation. Really.
Yes, and Andrew, we'll close this in a minute, go to the second video. But lots of questions for you as you were teeing this up and considering all the different options. How good were Andy, David, and the Shorts team at getting all those questions answered for you?
Oh yeah, well, absolutely fantastic. You can obviously hear what David said earlier. You can't do this on your own.
No.
It's impossible. You know, you need the support of somebody, certainly from the bit that David specialises in with the tax side of it, but also as I mentioned, Adam Ames also project managed it primarily. It was Adam that looked after that, who's obviously at Shorts, and yeah, it really helped because it's impossible in my opinion to do something like this on your own, because you've got to have a specialist company looking after it for you, you know. And yeah, and then it's all about keeping things, for myself, the rules of engagement that I like, is it's nice and straightforward and easily understood, you know, and it is complex. I'm not going to sugarcoat it saying it's not, but these guys obviously helped me by, you know, just put it in nice plain English for me. And yeah, it was there was a lot of compliance angles to the boxes to tick, but we did it in the right manner. And you know, then that once it's done, it's been done in the right manner. It's obviously it's there to last. So yeah, it went really well. But yeah, we definitely needed that support, 100%.
And just to conclude, it's not just commercial expertise and financial experience that goes into this. This is an emotional decision as well. This is your baby, Andrew, isn't it? So having people that get alongside you, not quite as a therapist or a psychiatrist, but a good trusted friend that will have your back and know that they've got your best interest at heart. How important is that?
Absolutely, yeah. I mean, I suppose the big rule is rule number one: take the emotion out of the situation. But you can't do that when you've obviously been there from day one and you've built the business, and you know it's been a huge part of your life. So yeah, we're obviously having chats with Andy, David, and Adam. You know, they try and keep a practical approach. You know, you don't want to, like I said, you need to take the emotion out of it and stay very real and try and focus on what's next, because, and you're right, it is a bit therapeutic, I guess, you know, where you're actually being told, well, what happens after, you know, and what's your sort of plan when everything's done. And it's sort of, the way that it worked out with me is that I just couldn't flick a switch and suddenly switch off from what I'm doing, you know. Sure. So it sort of gives you that, I've got a plan now that's an exit plan over 5 years, and I'm building myself up to that, or trying to, should I say, you know. And yeah, a lot of the chat was around that, you know, more the personal side. Forget, just park to one side all the compliance angles and you know, the EOT and all the legal side of it, etc., etc., etc. You know, what about you? You know, and that's where I brought my wife down, and we went into Shorts in Sheffield, and we had some good honest chat there about what's right for us. And quite good with the EOT that we managed to make it right for ourselves, and very much I feel we made it right for the people at T. Allen as well, which is very important to me.
Yeah, that's why they call them trusted advisors, people like Andy and David and the team. So gentlemen, for the moment, thanks very much. We really appreciate your insights and your passion about what's gone on here today.